club account. Just be aware in this, there's accumulated depreciation at the start of the year. They put a nice big bold writing, so a bit like the service firms. You just have to take that into account when you're doing the assets at the start of the year, but also your accumulated depreciation in your balance sheet. Beyond that, it's a normal club account. There might be a couple of little things in there which we'll see, like a grant, for instance. Just check what they're doing with the grant, if they're going to be in income or in finance by. Look, we'll see how we go as we go. So, included in the assets and liabilities of Abbey Hockey Club are the following. I presume the first thing you'll be asked to do is show the accumulated fund on the 1st of the 1st, and it is. So, we've got a clubhouse. So, we've got a clubhouse of 950, and we've got 3 years accumulated depreciation. Now, the rate of depreciation, I assume, is 2%. We'll just check that. Check these. So they're equipment 12.5, 2% for clubhouse, grand. So it's going to be 2% of 950 by 3 years. 2% of 950 by 3. So that's 57,000. So it'll be 893. Second one we have is equipment. And that's 42,000, and it was 12.5%. So 12.5% of 42,000. Again, that's by 3, so 15,750, so that's what, 26,250. Next one's life membership, which is liability, 48,000. You have creditors, which is a liability, €700. Wages due is a liability of 440. Levy reserve fund is a liability, 50,000. You're not changing any of these figures bar the assets. Subs prepaid is a liability, and investment interest receivable due is an asset, right? So 420. Now you have to be aware, if you've got investments interest due, you have to have investments. So we're going to just make a note of that now in case we forget them. All right, so and we're looking for our extra. So we're always looking for a bank balance. So it's 98 on the debit side. So cash at bank or bank balance, whatever you want to call it. That's an asset. We know we always look for a loan. So we're going to have a loan and loan interest due. And we also always have our levy due. Well, we don't always have it, but we generally always have a levy due from last year. So the levy of 200, the levy for 2020 even have €100 from 30 members. So that's 100 by 30 will be 3,000. So we need to work out what the investments are, and then the bank loan and the loan interest due. So let's have a look at the investments, right? So we've 10 months interest on 5% investments up to the 30th of the 6th, 2021 is 1050. Jesus, this is actually tricky enough working. So we've 1050. That's the first thing. We've investment interest due of 420, so we have to take that away. So your investment income is, and that is for, sorry, I just worked that out. So that is 630, and that's up to the 30th of the 6th. All right. So your investment interest for a full year is going to be 630 plus 630, or 630 by 2. That is assuming there's no due at the end of the year. So just let me check that. There isn't. So the investment interest is 1260. All right. That is for 5%. So 5% is equal to 1260 for a full year. All right. So we need to find 100%. So the 100% will be equal to 1260 divided by 5 multiplied by 100. Again, just be careful on that question. So the investments will be 25,200. I will be making a note of that and remembering to put it in my balance sheet as well. I might even just put it in my balance sheet now. Don't forget that. So that was a tricky enough question. There's also, straight away, I'll tell you now, there's investment interest due. And I'm just going to put that there so I don't forget it, and I'll work it out later on. Okay. So obviously we've only received, if we look at it, actually I'll just work it out now. We've only received 630, so it means we were due to receive 630 as well. So 1260 minus 630 is 630, because you have to, again, the accruals concept, you have to account for stuff, put that due in and account for it. I don't know why that's there as a percentage, but anyway. So that's that. The loan then, right? So the bank loan and 9 months interest at 8%. Per annum on the 30th of the 8th, 2021. So again, this is another not straightforward working, but you follow the same purpose. So the loan and the loan interest. So the loan and loan interest is 273 480. Now the loan is 100%. So that's 100%. And then the loan interest, you've got 9 months interest at 8%, right? So 9 months is 3/4 of a year. So plus 9/12 of 8%. So, sorry. So 9 months plus 8%. 3/4 of 8%. So that'll be 100 plus 6%. So that equals 106%. So we need to find the loan. So the loan itself is going to be 273 480 divided by 106 multiplied by 100. And that's 258, right? So what I'd say to you with that is, don't bloody panic when you see something like that. Like, that's actually a tricky enough thing, but you'll work it out as you see it. You've 9 months, so 3/4 of a year is 6%. All right. So the loan interest then has to be the difference between the two of those. I'll just put in the loan, actually, 258. So the loan interest has to be the difference between the two of those. So 273 480 minus 258. And that's 15,480. All right. So that 15,480 is 9 months. Now we paid the loan back on the 30th of the 6th, so this year is 6 months. This year's expense is 6 months. So there has to be a due on the 1st of the 1st of 3 months. That's like back to your normal working. So if we take that 15,480 divide by 9 and multiply by 6, you get the expense for the year 10,320, and then the difference is 5,160. So that's your due on the 1st of the 1st. And you can put in your 10,320 now in your expenses. Right, that's a really hard. Well, it's not hard, but it's been up in a few questions now at this stage, so we have to assume it's going to be the standard going forward. All right, so we can assume or hope that's that's all of them in now. So our assets add up to so it should be 893, shouldn't it? So I feel like I've left something out now. 26. I left something out. No, that's everything. Although there's normally, I wonder why it's not there. You would normally have, I'm sure I've just left it out completely. I was going to say you'd normally have bar stock. Just don't know how I missed that. So bar stock is 1820. So obviously it's always a good idea to read back through them before you total things, just to be sure. So we've got our 893, 26,250. We have our bar stock now of 1820. We've our investments 25.2. Investment income due 420. Bar debtors, well, you left that out as well, so sorry about this. So bar debtors was 560. Jeez, I've no idea how I left that out. Left those two out. Shows you just taking care on these is key. So 960,050. No confidence that this is right now as a result of any of this, but anyway, add up our liabilities, hopefully have all of those in, and take them away. We can come back and check at the end if we're right. We should be able to find the mistake. So that gives you an accumulated fund of 596,750, which obviously goes in your balance sheet straight away. 956,750. Okay, so when you have that done, lads, you're starting again at the top, and we're going to do our we're going to put everything in, but before we do, I'm going to do my bar trading. Okay, so that's your first working. So we've got our bar sales of okay, Jesus, where are they? Bar seat 73,600. Now we need to take away the debtors at the start of the year because they're to do it last year. So 560, and add on the debtors at the end of the year. So you've got bar debtors at the end of the year of 780. So that'll be 73.6 minus 560 plus 780. Our opening stock's up the top, 1820. Again, I would hope I noticed I hadn't put them in when I'm doing the bar trading. our purchases ties in with creditors. So you've bar purchases of 43,800. Take away your creditors at the start of the year because they're to do it last year, so minus 700, and add on your creditors at the end of the year of 1,1. And then take away your closing stock of 21,700 minus 11,460. So the 11,460 is to do with the catering, so we can't include it. So that's 10,240 to take away. So 73,820 minus 35. Sorry, where am I going? It should be minus, shouldn't it? So minus 10,240. 10,240. So take those away. And you get 38,040 as your bar profit. That's your income. 38,040. Alright, so I'll go back up to the top now and I'll make sure I've got everything in. So my first thing is my clubhouse and Astro. So my clubhouse is 950. So we just have to be aware that there could be a change in that. So just be ready to change it. So you might have built an extension or something like that. Okay, so we haven't. So we've got depreciation of the clubhouse, which we know was 2%. So 2% of 950. Which is 2% of 950 is 19,000. And you've got accumulated depreciation now. So if you remember, you already have 57,000 depreciation. So you've got 57,000 minus another 19,000, or adding on another 19,000. So you've accumulated depreciation is 78. Okay, and that's 872. So is that right? 70. 950. Jesus, 57. So 76. The equipment then should be the next one. Sorry, bar stock is the next one, which we've done. Equipment is the next one to go in. So equipment is 42,000. Now we have to check and see if there's been any transaction on equipment. So we've sold equipment that cost 30,000 and we've bought equipment costing 47,000. So equipment has gone from 42. We're going to take away 30,000 it cost and we're going to add on the 47,000 that we bought. And that's 59,000. Now, ordinarily you just depreciate that 59,000, but in this question you won't, so there'd be a working involved. Okay, so we're depreciating equipment. A full year's depreciation is charged in the year of acquisition and none in the year of disposal. So we're depreciating 12.5% of the new equipment figure, because you're depreciating the 42, but you're not depreciating any of the 30, so that brings you down to the 12,000, but you have to depreciate the 47 for a full year, so you're depreciating all of the 59,000. So it's 12.5% of 59,000. Which is 7,375. So that's going to go in as an expense. this is pretty much the same as question 1 depreciation working now. You're going to have accumulated depreciation. So anytime we have depreciation, we've accumulated depreciation. So we started off with the depreciation of 15,750. We're going to add on this year's depreciation of 7,375, and we have to depreciate. We have to get rid of the depreciation on the one we sold. So that's 12.5% of 30,000 by the number of years we had it for. Remember, you're not depreciating it for this year, but you're depreciating it for every other year you have it. So, does it tell us when we bought it? Let's just have a look. When you have to assume, I suppose, you got it 3 years ago. So, because all fixed assets have 3 years depreciation, so you can just assume that it's by 3 years, or 36/12. Again, that might have caused some confusion, but understanding that you have it for 3 years already would be a help. So 11,250 gets taken away from that. Plus 7,350 minus 11,250. So the accumulated depreciation would be 11,875. Again, has to have a 75 in it. Where am I going wrong? 11,7,375. So 11,875. Now, again, anytime you sell an asset, you have a profit or loss on the sale of that asset. So if we look, it cost 30,000. It depreciated by 3 years, so 11,250, and that will give you its value. So that'll be what, 19,750, 18,750. You received, over here tells us you received 7,000 for it. So that means you made a loss of 11,750. Okay, so the loss of the sale will be 11,750, which is an expense. Now, this is, hopefully that's the hard, or any extras or new things or tricky things done in the question. So that's equipment done. Bar debtors is done. Life memberships 48,000. Now we know life memberships if it goes in finance buy. So if we go down and check, see if we've any new life members. Nothing there. So go down in the question. Life membership is to be credited to income over a 10-year period, which commenced in 2019. There are no new life members by the looks of it. So life membership had been, life membership started off as 48,000. We're in the accounts for 2021. So it's been written off over a 10-year period. So if I just do this, life membership written off. So it's been written off over 10 years, but that started in 2019. So they've already got 2 years done. Okay, so the life membership written off will be divided by 8 rather than divided by 10. So it's 48,000 divided by 8. So you've already done 2 years, so you're down to 8/10. So that's 6,000. So life membership is going to be 48 minus 6, which is 42,000. Okay, so the 6,000 is income. You've seen that before in the recent patents workings. where you've already written off some of them. So it's the same sort of process. Bar creditors is done. Wages due. Again, let's have a look. So wages due generally will go in with sundry expenses. Now, unless it tells you to do with a coach or something, which it's done that before. There you go. So the wages due were owed to the club coach for 2 weeks and provide for more wages due and include a bonus of 30 for each of the next 3 weeks. So that's not tricky. It's just there's a lot in that. So if we look at the wages, it'll be coaching rather than wages. So I'll just put in the wages and general expenses, and that can go straight in then. Or it's not wage, sorry, it's sundry, isn't it? So the sundry can go straight in. 64,360. Normally that would be changing, and I'm going to change the coaching now in my working. So if we look at our coaching, so the coaching is 15,540. It tells us that wages due at the start of the year is to do with the coach, so we're going to have to take that away. So take away the wages due of 440. And then it tells us that we have to provide for 3 weeks wages due on the 31st of the 12th, right? So we can assume that 15.1 is for 52 weeks. So 3 weeks, well then that'll be 15.1 divided by 52 multiplied by 3. That's wrong. There's no way there's a decimal place in that, so each of the 3 weeks. So I'm going to have to come back to that. Don't know why that is. 440, 52, 1. That's wrong. Just have a read of it. Okay, sorry. So we can assume that so it's 2 weeks, so it's 22 a week. It's if that's 2 weeks. I've overthought this a bit. If that's 2 weeks, it's €22 a week. So 3 weeks more, it's 220 a week. So 3 weeks more would be 3 by 220, which is a further 660. And then there's a further due of 30 a week, which would be another 90 of a bonus, right? So the wages will be an extra 750 for the coach. So that, so that'll be 15,850. So the coaching will be 15,850. So again, you started off 15,540. Take away the due to start of the year 440 for 2 weeks. Then it's saying provide for another 3 weeks with a bonus of 30. So if 2 weeks is 440, each week is 220. So 3 by 220 is 660, and then add in your bonus of 15,850. It's bloody tricky enough, this question. So 15,850 is your expense, so your coaching. And your wages due will be the 750. So the 660 plus the 90 wages due at the end of the year will be a current liability. Yeah, really tricky. I hope there's not too much more in this. All right, the Levy Reserve Fund is 50,000, and normally there's an extra levy. So see if you've got any more money in. It's normally part of the subs, or it'll say it somewhere. Life membership grant. Yeah, so you have another levy of 100 by 650, so another 65,000. So that'll be 115 in total. Subs received in advance. So this is our subs working. So I'm hoping this is the last big working. Alright, so we've got subs of 425,500. Alright, you've got subs received in advance, so we're going to add that on. So they were to do with this year, but they were paid last year. So add it on. And then we're going to have to take away any of the extras. So we go down to our subs, so we take away our subs for next year, which is a current asset. So 3160. We're going to take away our levy on this year. 2021, so the levy is 65,000. And then we're going to take away our levy from last year, because it's a levy. Anything that's not subs gets taken away, but if it's not subs and it's not this year, it definitely gets taken away. So another 3,000 gets taken away there. So that's 340, which is our income. So it's 340. Okay, investment interest receivable due 420. Now we've done that, all right. So we're down into the main part of the question, and hopefully most of these are dealt with, and we just have to tidy it up a little bit. So we've done the bank balance, that's in our current assets. We've done our subs working. We've done our investment income. Or have we? We haven't. So, all right, so the investment income for a full year, I've definitely done the working on this. Some of the first things I did is 1260. So investment income is obviously income, and there was investment income due of half a year. It was 630. The first working I did. Competition fees. So check and see if there's any competition prizes or competition. There is. So there'll be a competition profit. Sorry, just don't have enough space here. So competition profit will be the 22.4 minus the prizes of 18.9. So that's 3,500. You've got the catering receipts, and there should be catering expenses. There is, so there's going to be a catering profit. Now, catering receipts are 122,500, and the catering purchases are 93,100. But there's catering closing stock which has to be taken away from that. So there's a closing stock of 11,460 with catering, so that gets taken away from that. So it's 122. That'll be 122,500 minus 93,100 minus 11,460 in brackets. So your catering profit is 48.60. Sale of equipment, we've done that, and we've done the profit or loss on the sale, of equipment. The National Lottery grant and the Hockey Ireland grant, I'll come back to, and the bar receipts are done. I'll come back to those because I want to see if they're to go into income or to go into finance by. Catering purchases is done, loan interest is done, sundry expenses I put in, bar purchases is done, competition prizes is done, purchase of equipment is in, fixed assets, coaching expenses is done, and then the balance is a current asset. So the bank balance at the end of the year, it's money we have in the bank, so 239,170. So if I go down and check and see what it says about these grants. So the grant for the National Lottery is a one-off basis. That makes it a finance buy. It tells it to be treated as a capital item. So the big number is capital item. It's 120. The grant for the Hockey Ireland is to be treated as income. So it's 73,600. It's not. It's 13,500. So it's to be treated as a revenue item. Yeah. So we've everything in from there. So we just check we've all these in at the bottom. So we've our investment income. We don't have our bar stock and our catering stock in. We get those in. 11,460 and 21,7 minus 11,460. Bar debtors is an asset. 780, and bar creditors is 11. We've the depreciations in for equipment and clubhouse. Life membership written off is in, and life membership is in. The grants are done. Wages due is in. Subs for next year, subs prepaid, should be in liability. I really should have put that in when I was doing them, but anyway, no harm done. The levy is in, and the levy from last year is in, so I'm quite hopeful that I can get this to balance. Well, semi-hopeful I can get this to balance. It's a really tricky question. So our incomes, I haven't left anything out. 458,500. And 128,665. So we'll just take them away, and you get an excess income of 329,835, and of course that'll go in your finance buy. So if we add up my assets, and then if I add up my investments onto them, I've got 946,325. Add up my current assets, I'm getting 262,280. And my three current liabilities. So there's normally two current liabilities, but you've got your wages due in this case, so that's 5010. Take them away from each other, and then add that on. Add your working capital onto your finance to your fixed assets, and that gives you your total net assets of 120,395, 595 even. I'm just going to add these up and really hope that I'm right. What about if it accumulate fund? Then the wrong way around. 596. to one extra zero in that. There we go, and it balances. That's that done. You had your little bit of theory. What's meant by special purpose profit and loss account? That's your bar trading account. So a lot of most non for profit organisations like clubs um, run commercial activities that are used to generate income to run their clubs, and the the income and expenditure related to those commercial activities are run in special purpose vehicle accounts like a bar trading account. Okay. Um, there's a proposal to reduce the annual subs by 10% for the next 3 years. Would you be in favour of it? Well, there's a couple of things you have to look at now. I'll go through this in more detail when we're revising these, but uh, you have to look at the financial position of the firm, right, or of the club. So they're in a strong cash financial position. They have 239 grand in the bank. Uh, if subs didn't change, the amount of subscriptions if would go down by 35,000 if we got no new members in. So the club can well afford that 35,000 each year. If it's got a strong financial position, and if there's an excess income of 300,000, it can very much afford that. Um, they have repaid the loan, so they've no debt. Um, they might bring in extra. You can always say that cutting subscriptions will bring in extra members, which could offset the reduction in subscriptions. Um, so they're very well set to, if they wish to reduce their memberships, there's no problem with it. Just a lesson on this, right? So most people would have been hoping for club accounts to come up last year. They came up, but it was a really, really, really difficult question with a lot of things from other parts of the course brought in that you would have had to have your wits about you to do. So while it might have seemed like a nice straightforward question last year, it would have been very, very difficult and a little bit stressful. So just be careful to read the questions properly before you start doing them in an exam. All right, hopefully that was some help. I made plenty of mistakes doing that, so it'll be of some help to me. We'll see you later.